It's happy Wednesday, everybody. Welcome to today's episode of Crypto with Chris. Today we're going to take a look at recent price action, spend a few minutes doing that, and then I'm going to dig into the Bitcoin death cross that has just occurred yesterday, I think, or the day before maybe. I'm going to be comparing it to previous instances in the past to see if we can get some insight about what might happen this time around. I have a really cool chart that I drew up that really digs into a bunch of stuff, so I'm looking forward to that. But before we get started, I got to do all the reminder stuff. Firstly, follow my Twitch channel so that you can get alerts and comment in the chat. You do need to be a follower in order to comment. And honestly, it's funny. I'm really trying to get 50 followers here because I need to be able to level up in Twitch so I can start doing some stuff. Which brings me to my next point. If you go to my Twitch channel, you'll see that there's only like 2 or 3 of my past episodes. And this is because Twitch doesn't allow me to store more than 7 days worth of shows at any time. So once I can level up, then I can start saving more stuff on my Twitch and doing some other stuff with it. And it just gives me more flexibility and makes my channel cooler. So yeah, you know, throw me a bone here and follow my stuff. Even if you don't watch it every time, I don't care. And then lastly, I do have a Telegram alerts channel so that you can get notified whenever I'm going to be on any other shows. I sometimes do shows for Real Vision as well. And so Telegram is where I've just kind of unified all of that. And you can follow me there to get announcements for all of that stuff. And all the links to all of these channels are in the description of each video, including this video, and then in my general Twitch channel description as well. So, all right, with that, let's get started here. I'm not going to spend a ton of time on Bitcoin, but I do want to talk about it a little bit. And really the reason for that is primarily just because nothing has changed. Fundamentally, the structure is still the same as it's been now for going on, well, a month really at this point. But let's take a look at what we got here. So we have this, let's zoom in. Basically, we have nothing. Yes, we have a green candle right here, but basically we're just kind of riding this support line. Yeah, we did sort of set a little bit lower of a low, but we still didn't go past this weekly cycle invalidation level. So like in that sense, in that sort of structural setting, everything is still as it was. You know, we haven't invalidated this yet, but we got really close to it. So sorry, I was getting streaming notifications here. Okay, anyway, but outside of this, yeah, it's the same. You know, the 10-day has finally turned down below the 20. I now have this bull cycle. What is this called? The bull market support band. Yeah, the bull market support band up here on here too. And basically, you know, I'm not really going to do anything with this chart until I see a few things. One of a few things happen. One, I get a solid dark divergence indicator, meaning a regular divergence has occurred on either side, either on the top or the bottom. That's going to get my attention either on the weekly or on the daily. And then, or if I start to see any of these 3 moving averages sort of reverse back upwards. But right now, none of that's happening. And so nothing has changed. And so my position here is still risk off. I'm still out of everything, basically. I'm still waiting for the markets to roll over. And this death cross is really going to kind of reinforce a lot of that, you know, that we'll get to here in a minute. But yeah, I just kind of wanted to point out that in terms of what we're looking at on just regular everyday price action, death cross aside, nothing has really changed. Let's touch on it here on the daily just briefly. I know we've had a couple of, you know, nice little pumps, you know, yesterday, a little bit today, but honestly, this is still nothing. This isn't, it's barely a mean reversion, even on the daily, you know, which really is nothing. It's basically just hovering around the 20-day moving average, which again is you don't, you know, base major decisions off of little tiny 1 or 2% moves like this on a given day. So again, I really, these darker ones are what I'm going to be paying attention to. And right now we're not getting anything like that. So, so yeah, there's really not much going on there. It's just kind of status quo. It's as it's been. I'll briefly touch on a couple other things before I get into the death cross stuff. I did want to look at the Bitcoin, Ethereum, or I'm sorry, ETH BTC monthly chart, because this is something I noticed. So I had this range drawn basically from, you know, the bottom here to the top of this. And this is basically the same range it's been in now for well, more than the entire year. But I've noticed in the last 4 months, it's come down and it's touched this level 4 months in a row now, including right now as we speak. It's basically sitting here, and it's been in this kind of ugly looking downtrend now, really since, well, all of the year, basically. I mean, this covers 22 also and 23. So this entire year, it's more or less been in a downtrend on the monthly. And it's poked down below this here. And you shouldn't be in ETH right now, basically, is my point here. There's no reason to be in ETH. There's no reason to be in really anything but Bitcoin. And really, honestly, at the moment, there's not really much of a reason to be in Bitcoin either. So if you're in anything but Bitcoin, you need to kind of be questioning what you're doing here, because you're probably going to watch your money continue to bleed out. And I'm not going to go into all the alts like I do. But, I've kind of rehashed this point over and over again now. I do want to touch briefly on, though, let's look at the dominance here for just a quick second. We had this kind of alt run for a minute. It's since reversed. ETH is, like I just showed, continued to bleed out. Bitcoin has taken a tick up in dominance. So it's like, that's kind of interesting, but really it reinforces what I'm saying. There's, this is going to reverse, and this is probably going to keep going up. And meanwhile, Bitcoin price is going to be level and probably go down. So there's no reason to be in anything right now. Lastly, let's look at the Dixie real quick, because it's kind of getting rejected here. It did come up and set a higher high that I talked about last week. It could do something like it did a couple weeks ago here, where it looked like it was going to, reverse, and it had a pretty solid red candle here going for most of the week. And then by the end of the week, it almost flipped back. Well, it did flip back green again. And I almost think we could see something like that again here. And so, I've got an alert set here, because this would basically be a higher high on the weekly. Yeah, we have this wick here, but I'll be paying attention to. But basically, this is what's driving everything. And if we look at this chart, this is the Dixie inverted, but slight reversal here, slight tick up in liquidity, slight tick up in Bitcoin price. But I feel like this is all going to be very short-lived. I think liquidity is going to continue to reverse back down. I think the Dixie is going to continue to reverse back down. And I think the Bitcoin price is going to reverse back down, which leads me to the death cross. So real quick, a few weeks ago, I made this chart when we talked about how Bitcoin had rolled over the 20-week moving average, and I had highlighted all these instances where it happened and talked about how, there hasn't been one instance where it was, less than a 48, I think, % correction, something like that. Well, I did kind of a similar deep dive with the death cross, and I wanted to kind of go back through and look at it. And so I guess first, let me answer what actually is a death cross. What does that mean? Well, so it's basically when the 20-week moving average when the 50-week moving average crosses down below the 200-week moving average. And that's happened about 10 times in Bitcoin's history. And so I wanted to kind of go back and dig through each time that that's happened and sort of give it some context, and sort of, look at that to see if we can infer what might be going on right now and what that looks like compared to previous times that it's happened. And so let's kind of briefly touch through, and then I've got a bunch of markups here that I'm going to display in a second, and you'll see. But basically, so this is where it just happened just now. And I'm going to leave this on the daily because that's what it needs to be. And so here we can see this cross right here. That was yesterday, I think. Prior to that, we do always get death crosses in, bear markets, in the year-long cyclical bear markets that we get. So we had the last one here at the start of the bear market. We did have one because we had kind of a double top here. So we had a death cross here. And then in pre-halving years, generally we get a death cross, which I'll touch on in a bit. We had actually two here. And then, of course, the 2017 bear market, we had a big one here. And then going into the other pre-halving year in 2015, we had one here. And then that bear market, we had one there. And I want to say, no, we had one more here. So this was the first death cross. So that's a total of 10. So again, let's talk about what this means here. Let me turn on all my stuff, and it's going to look really busy here at first, but I promise we'll make sense of it. So really, one of the things I'm paying close attention to are the pre-halving years, because that's basically where we're at right now. We're in the pre-halving year. We're in year one of a new cycle, of a new 4-year cycle. And every time that in that scenario, the year one of a new 4-year cycle, the pre-halving year, we have had a death cross. And so I wanted to look at those first, because I feel like that's sort of the most relevant context that we've had. So let's go back to the previous cycle, which is 2019. And sure enough, right here, here was the first one. And it happened, it actually, so we had that death cross 297 days into that cycle. Made a note here from the beginning, from January, or into the halving year, I should say specifically. Into the halving year, 297 days into the halving year, we had our first death cross. This year, we're 252 days into the halving year from January, or the pre-halving year, and we had our death cross. We had another one here this year, although this was primarily because of COVID, and you could argue that were it not for COVID, we likely would not have had another one, because it really had to drop so drastically here to kick this moving average down below here. And it's very likely that this would not have happened were it not for the Black Swan event that happened here. So I'm not really going to put much weight into this. I don't really think about it much. But what I did here with all of these is I went back and I measured how many days it was, from the start of the cross to the golden cross, or the reversal of it where it crossed back up over, how many days it was, and then what was the largest, where did it bottom after the day of the cross? How low did it get after the day of the cross? Sometimes it wasn't very much. Sometimes it was a lot. If you go back to like these earlier ones, like in a year-long bear cycle, obviously you're going to have a massive correction, just like with anything. It went down, like here was the day of the cross. From this day, it bottomed out at minus 64% over the course of 389 days. That's what you're going to see in a typical cyclical bear market type death cross. But then you get these shorter ones like this that are kind of more anomalies. And this one was definitely an anomaly too, because, all of the steam had left the market at this point, and really we probably shouldn't have come back up. This should have been, duck cross, but we did. And so this one was shorter. It only had almost a 20% correction from the day of the cross to the ultimate low that it had, which didn't occur. It only took a few days to actually get that low. Yeah, we double bottomed it further in the summer, but from the day of the cross, it hit its low barely a few days later, and then came back up and double bottomed again before ultimately reversing. But in terms of the actual cross taking it, from cross down to cross back up over, it took almost 90 days. So we'll go back to this one. This one took 116 days from the cross down to the crossover. I feel like this one, and then the one in 2015 that we're going to look at here in a second, is going to be the biggest examples we kind of need to pay attention to. So we're looking at 116 day from cross down to cross up, and a 26% correction. One thing I did want to point out is that in all of these, the shortest death cross from cross down to cross back up was 43 days, was still 43 days, so more than a month. So if we, kind of go back to looking at where we are now, 43 days puts us out a ways from now. So it's not like it's just going to be a quick dip and back over. So let's go back to, so here's the next one. Again, full bear market. Of course, you're going to get a massive correction, 55%, over 389 days. This was the longest one. Although one thing that's interesting to me, and this doesn't mean anything, but one interesting observation I made is that this, the 2017 bear market, 2018 bear market rather, and the 2021 bear market death cross to cross back up over were both exactly 389 days, which is pretty interesting to me. I mean, how you can't plan that, but it's just like, wow, So, Bitcoin is so cyclical in so many ways. It's just so interesting. So let's look at 2016. So remember how we mentioned from the start of the halving year to the first death cross in 2019, we had a 297-day stretch. In the current one, we had a 252-day stretch. Now, if we go back to 2015, 256-day stretch until we had the first death cross. So kind of right in the timing band. And what I think this is pointing out is that this is very sort of normal cyclical behavior, in terms of price action for Bitcoin to do. This isn't something that should be alarming. We've seen this literally every cycle where it's, done a death cross right around the same time frame in the first year of a new 4-year cycle. So in that sense, we're kind of right on track. And another thing that's interesting is in the 2015 one that happened, this was actually the shortest one. It was, only the 43-day stretch where it barely crossed down below, crossed back up. And in that sense, in that scenario, it only did a 2.8% correction from the day of the cross to the ultimate low before it resumed back upwards. Now, what does that compare to right now? What do I, let's kind of look at what's going on here. One thing that I noticed is I wanted to pay attention to the sort of space between these moving averages, the sort of depth of the divergence, if you will. And so I threw up this indicator here, which sort of measures the actual spread between the two moving averages. And we can see here that Bitcoin was really quite flat coming into this. These two moving averages were kind of almost just sort of dancing with each other. Price never really got that overextended. We didn't have this big run up like we did in 2019. And then it was just kind of, going sideways really this whole time. That doesn't look like it did in any of these later ones. So in 2019, as we've touched on in other videos, we were way overextended. I mean, there was a huge divergence in these two moving averages. And so it sort of had a lot more to come down, a lot more to fall for a correction. And that's I'm sure what made this spread, this time difference so much longer than the previous cycle. And then let's kind of compare it to this current cycle that we're in. We didn't have nearly as much of a divergence as we did in 2019 as we did right now. But we did have some, and it was certainly a lot more than 2016. Like if we go here, it was barely just this guy right here. I don't think I can fit them all on the screen. Oh yeah, I can. So here was 2015, just a bit of nothing. Here was 2019, huge spread in the two moving averages. And then here is right now, kind of about halfway in between, sort of split the difference a little bit here. So again, I'm not using this to make any predictions. Really what I'm trying to do here is just sort of provide some context, because I mean, you hear like people freaking out on Twitter, oh, death cross, what does that mean? Like everything's gonna go to zero or whatever. And I just wanted to kind of give you some historical context and go, oh, okay, this is actually normal. This happens every time. This is not a big deal. It doesn't generally mean a huge correction. Typically in a pre-halving year, we're looking at, 26% here. We only had 2% in the year before, or in the cycle before. So I kind of just drew this out. I'm like, well, what would that look like if we had a 26% correction? And, that puts us right around, what do we got here? 19,000, which it kind of, if you go back to this chart here that I've drawn, 19,000 is very close to this level here, this potential support level that I've drawn, where it would come down, touch on this bottom, this wick here, where it found support in this earlier cycle. That's at 19.5. So this level sort of comes into play more for me in this scenario, looking at this as a potential, landing point for this to kind of round over and level off at. That would be right in line with previous death cross, with the last cycle sort of death cross correction that we experienced. Now, I know that's different than when we talked about this, where we've got a full, 50% correction, which would bring us down to basically a round trip to a new low. And of course, who knows if any of this is going to happen? Maybe none of it's going to happen. But just again, this is all context. So like, here's basing it off of the 20-week moving average, crossover, and then here's basing it off of the death cross. The death cross is a little bit more optimistic. Generally, you don't get that big of a correction in a pre-halving year. So, this kind of makes a lot of sense, going back to that chart, looking at 19,000, 19,500, right in this range right here, kind of right in line with this moving average too. So yeah, that could be a thing. But, I guess time will tell. We shall see. So I had made a note here too. 112 bars basically remaining, I think, until the end of the year is where we're at. And then I also added the projected next halving, which is going to happen in April of 24, which is kind of happening a little bit earlier each time. In the last cycle, it happened in May. The previous cycle, it happened in July. And now it's projected to happen in April. So it's going to happen earlier in the next cycle or in the next year than it has in the past. And that's going to be interesting to see how that sort of dictates price action. Are we going to kind of get this bull run up a little bit earlier than we have historically? Maybe not. That doesn't really have any sort of correlation here to what I'm talking about with this death cross, but I thought it was interesting to note as I was digging through this. So yeah, I mean, here's where we're at. That's basically what's going on with the death cross. Again, I'm not worried about it. I think it's interesting. I do think that it could be, I know why I drew this. Okay, yeah. So if we're looking at, the last one was 116 days before it crossed back up over, 112 days would put us right at the end of the year, which would kind of make sense for what we've been talking about with price likely starting to rebound around that time, maybe even a little bit early, or maybe in November. Typically October, November, December, Q4 is a good time for Bitcoin. So bottoming out, in October sort of makes sense in terms of that, and having it bounce back up and kick back up, which would be right in line with about 112, 115 day death cross that we would, expect to see in this kind of a scenario. So all of that is kind of lining up with, what we're seeing right now. So yeah, I just think it's cool. I just thought it would be good to kind of, help inform people that, when they hear people tweet about this on Twitter, that it's not really a big deal, but that there is some interesting stuff going on with it that's worth paying attention to and worth noting. So I hope this was interesting. That's kind of all I wanted to touch on today. Next week we'll dig into, next episode, I wanted to dig into some more altcoin stuff and some more economic data stuff. But for now, yeah, I just wanted to kind of touch on this, and yeah, so hope you found that interesting, and I will see you guys. What is it, Friday? Yeah, Friday. All right. Have a good rest of your week, everybody. Thanks.